Big congratulations to everyone, because it looks like we're officially heading for the moon. The countdown is almost over, and I'm telling you, this is the moment to go all in. David Schwartz just dropped a tweet basically telling us don't sell, and that things are only going to get bigger from here. But before we break that down, let's talk about the major event that just unfolded. Bitcoin has just smashed through to a brand new all-time high, and something happened today that has literally never happened before in history. A couple of hours ago, when the 5-day candle closed, it finally happened. For over 210 days, we've been waiting for this exact moment, and now it's here. This is absolutely wild, and I guarantee you won't hear this anywhere else. Let's zoom out and look at the chart so it all makes sense. I'm going to remove the RSI so you can focus on what matters. This is the USDT dominance chart, which started back in 2015. It shows the percentage of the total crypto market made up by Tether USDT. Back in the early days, it was almost zero, just a tiny stable coin. But over time, Tether's supply exploded, and its share of the market ballooned. Right now, it sits at around 4% of the entire crypto space. Here's why this is so important. When this chart is rising, it means people are selling their crypto for USDT. When it's dropping, it means people are buying crypto using their USDT. Simple as that. Now, here's the huge part. A few hours ago, at 8 p.m. EST, the 5-day candle closed, and something we've been waiting for finally happened. Historically, whenever this moving average acted as support for USDT dominance, 1, 2, 3 times, Bitcoin got rejected at the same time. 1, 2, 3 times. But now, we've broken below that massive support for the first time ever. This is huge, because that moving average is now likely to flip into resistance. That means it's going to be much harder for the market to dump crypto prices like before, because they'd have to push USDT dominance back above that line. And on a 5-day time frame, that's no easy task. Sure, there's always a chance we retest that level, but breaking back above it, that's looking very unlikely, in my opinion. Now that we've broken below that massive support level, what's next for this chart? Well, the focus shifts to the 6-day moving average. Let's figure out how far away that is from where we're sitting now. Currently, we're around 4%. If we see a 9% drop here, what does that mean for Bitcoin? A 9% move would push Bitcoin up to roughly $123,000. If we stretch that to a 10% move, we're looking closer to $135,000. And it could go even higher depending on how much liquidity flows from altcoins into Bitcoin. If Bitcoin pumps 10% or so, XRP could absolutely skyrocket since it's been lagging behind. That could put XRP in the $5, $6 range. Ethereum could be looking at $5,000, $6,000 as well. Things are lining up beautifully. That's why I've been saying XRP is primed to move, and right now it's already starting to lift off. Why do I think this drop in USDT dominance has to continue? Because the chart is trying to set up a bullish divergence, and this is something hardly anyone is pointing out. Check out the higher time frames. The 3-day, 4-day, 5-day, 6-day, even the weekly. What do you see? On the RSI, we've had 2 clear bottoms, the first one, then the second one. And now we're here. The RSI is likely heading lower. If it doesn't, and instead holds at that key 25 level, that would create a rare triple bullish divergence on higher time frames. And that, my friends, would be explosive. This is why they need to keep pushing USDT dominance down. The first major support is just ahead, with a potential liquidity grab there. If that breaks, the next key level is on the weekly chart. If that goes, it's basically freefall mode. No real support left, just liquidity gaps everywhere. At that point, Bitcoin could surge to $150,000, maybe even $170,000. And once those levels are hit, the path to $1 million Bitcoin becomes a lot more realistic. Ethereum could follow to $50,000, $100,000, and XRP could rocket to $100. We're still moving step by step, but at some point, when the money printer kicks in, it's going to go full-on nuclear bazooka mode. For the immediate move, we're looking at Bitcoin climbing into the $130,000 range. XRP hitting about $5, $6, and Ethereum running up to roughly $5,000 6K. Not a bad rally at all, if you ask me. According to data from the bar charts, there's now a 100% probability of an interest rate cut at the September Fed meeting. That's right, it's essentially locked in. This is huge, because the market is already starting to price it in. Right now, we're expecting around a 25 basis point cut, maybe even 50, and the more cuts we see, the wilder this market is going to get. Here's the crazy part. The talk about rate cuts only started heating up right after we broke through that major moving average. That timing isn't just a coincidence. It shows just how important that technical break really was. This is exactly why I'm so bullish right now. David just stepped in to push back against the FUD, basically telling everyone, without saying it outright, don't sell here. But honestly, that's not even the biggest point right now. Take a look at what's happening. More companies in the payments and stablecoin space are launching their own blockchains. To me, that's a massive signal. The market is finally recognizing blockchain as core financial infrastructure. And that's something we've believed in and been building toward on the XRP ledger for over 13 years. Now, let's be real. Launching a blockchain is one thing, but creating a full ecosystem with developers, liquidity, trust, and actual real-world usage, that's a whole different level of difficulty. The XRP ledger has managed it because it's been stress-tested in the real world and has genuine institutional adoption. Compared to XRP, a lot of these newer blockchains are like kids learning to walk, and Bitcoin is the grandfather of them all. Fun fact, XRP is actually older than Ethereum. ETH didn't even come onto the scene until 2015, while the XRP ledger has been evolving and improving for well over a decade. Some blockchains run with permission validator sets, meaning one organization or a small group controls them. That can work for closed network situations where compliance and control are important, but it comes at a cost. It limits reach, resilience, and open participation in securing and expanding the network. The centralization versus decentralization debate never really ends, and there's no one-size-fits-all answer. Even the definitions of those terms have shifted over the years. But here's the irony. Every blockchain is decentralized and centralized in some way at the same time. It's a paradox, and Bitcoin is the perfect example of that. Satoshi Nakamoto still holds a chunk of Bitcoin supply that's out there on the open market, and while the rest is spread across institutions and individuals, Bitcoin could still theoretically be targeted. But here's the thing. Centralization isn't always bad. In fact, if the large holder is a good actor, it can actually be a huge benefit. Look at Satoshi, prime example. He hasn't dumped any of his Bitcoin while prices have exploded over the years. In fact, the only time he sold was way back when Bitcoin was just pennies, and it was only about 1,000 coins. No selling pressure since then, which means that supply is essentially locked away off the market. Ripple is similar in that way. Yes, they hold a portion of the XRP supply in escrow, and yes, they sell some, but that money goes right back into building out the ecosystem. They're not some malicious entity trying to crash the market. Now, sure, if Satoshi suddenly turned into a bad actor in the future, that could be a problem for centralization. But remember, networks like Bitcoin and XRP are also decentralized, thanks to their nodes and validators spread around the globe. The XRP ledger, for example, is public and permissionless at its core, with optional permission features for regulated use cases. That flexibility makes it incredibly adaptable and interoperable, exactly what's needed for a global financial backbone. It's built for cross-border connectivity, linking assets, markets, and participants with seamless transactions. Fees? Practically nothing, just fractions of a cent. And there's no separate gas token to deal with. You can pay directly in XRP for any issued asset, cutting out the friction of creating another token just for payments. XRP itself is counterparty-free, open to anyone, and serves as a bridge asset with real proven use cases in payments, settlement, and liquidity. And with every transaction, a small amount of XRP is burned forever, reducing supply. It's interesting. to see newer chains starting to copy features the XRP ledger has had for years, like deterministic finality and proof of authority style consensus. The fact that they're now recognizing the importance of reliable, low-cost settlement for finance shows the industry's catching up. Looking ahead, XRPL is set for even bigger upgrades, more programmability, compliance-ready features, and deeper institutional liquidity. And if you're just now joining the XRP story, welcome. The tent is only getting bigger. David Schwartz himself came out recently to counter the FUD, basically telling people don't sell, especially now when the XRP ledger is just getting warmed up. So even if we do retest that moving average, don't panic. The next big crypto pump is coming, and this is still only the beginning.